Hi, my name is Kar and welcome to the new chapter. In this chapter, we are going to learn about the inducement and liquidity sweep. As I teach you in our chapter 1, 2 and 3 that how inducement work, how pullback is a work, because pullback is a main thing is here. Once you are able to identify pullback, then you can identify the structure. And once you are identify the structure, then you can easily spot our inducement and liquidity point. So everything is connected to each other. That's why every step is important. So in this chapter, we are going to learn about the inducement and liquidity sweep, how it works. So firstly, we are going to understand on our diagram. Then I will show you on a real chart. Firstly, look at this one. If market momentum is a bullish, simply we know when market creating higher high in a previous chapter, then market create a bullish structure. After that, what happened here? Look at this one. This is a higher high, means the previous higher high is here, means that everything is a looks bullish here. And if everything is a bullish, simply we need to wait for it to break the previous recent low, which act like a inducement. So in this case, what happened here? This is a previous low and broken by this candle is here. So if this one is a broken, it means this is a called inducement. Inducement means the induce to people for the opposite of the direction. Like market is a bullish, means everything is a bullish. When market broke this one, and a lot of people are introduced here for the sell side because they know market momentum is a bullish and this is a trend line and this one is a broken and they are looking for the sell. This one is a called trap, you can say, and this is a called induce to people induce in a trading and on any specific point, that's called inducement. Okay, and simple thing is here, if anybody buying here on a breakout, they are buying here, they're putting the stop loss just below it. That's why market came back to the downside to taken out this liquidity here, and that's called inducement, and then market went up. But this inducement not confirmed yet. So generally when market break the previous low, so that's called inducement. Okay, and this inducement only confirm when market break the previous recent high. Okay, that this one is a broken and go higher, but at this point price close of it. But at this point doesn't matter that this is a sweep and candle close, it doesn't matter. Okay, you have to wait for it. Once market break this one, like inducement taken out, and this can be candle closing in a bearish and candle can be like bullish candle here, it doesn't matter. Okay, main thing is here, if market came back this one and taken out the inducement and market go higher, at this point market just close of it. Once market close of it, so we can confirm inducement taken out and we can plan here for the buy to the upside like this one, which I will explain in next chapter. And same thing applicable here, like market momentum is a bullish. In this case, we can see here, this is a previous swing low, and when market taken out this one, in this case, market created strong bearish and bullish candle, and which is act like a long shadow, and which is act like a like for the reversal. We know already, but main thing is a confirm here when market break the previous structure and market close of it. If price close of it, so we can confirm that this inducement is taken out, and we can confirm that market looking for some continuation, and this is applicable for the continuation. It doesn't matter candle closing or like a bullish candle and bearish candle, it doesn't matter. After taking out the inducement in continuation pattern, you need to understand simple thing is here, if market momentum in a continuation and taken out the inducement, and those inducement taken out by a single candle, can be blue candle, black candle, and can be long shadow, small shadow, it doesn't matter. Okay, everything is a fine. But remember, while market taken out the reversal, that's another thing is here, you need to understand two things. First thing is here, after taking out the inducement, candle color, it doesn't matter. Those can be blue, black, green, red, any candle. Okay, and also those can be like a reversal candle like this one, and can be like this one, like strong bullish candlestick here and bearish candlestick here, it doesn't matter. Okay, and next thing is here for the reversal is all about the liquidity sweep, how it work and how we can identify them. Firstly, liquidity sweep, generally you will see top of the move and bottom of the move. Look at this one. In this case, we can see here market just sweep the liquidity. Okay, in this case, market must be close below it, and this candle color may be blue, black, and red, any color can be here. But remember thing is here, the market must be close just below it. Okay, if price close below the previous high and then market pushing downside, and after that market must be break the previous low is here, previous swing low, and candle close below it. If close below it, so we can confirm this one is a liquidity sweep here, and we are expecting some reversal in a downside. Okay, And sometime what happened, market just sweep the previous high, and after that market just sweep the previous low, and then market went up. And you are thinking that market sweep the liquidity. No, this one is a not sweep the liquidity, because of the market just taken out the both side liquidity, and this one is a not area for the reversal. This can be for the continuation, because market can go higher. If go higher, so we can expect like close away it, so we can expect some continuation because of the liquidity is taken out in a downside. That's why market trap in a both side. So you need to prepare, and you have to prepare for the both side until waiting for the candle closing. And same thing applicable in a bearish market. We can see here clearly market momentum is a bearish and break the previous recent high is here. And in this case, this candle can be bullish and next candle can be bearish. And maybe here we can see like this shadow hammer type of candle can be here. It doesn't matter. This candle is not matter. Main thing is here, after pushing downside, market break the previous recent low is here. Market must be close below it. While market close below it, so we can confirm that this is a bearish momentum and we are looking for the continuation. And this is applicable in a continuation only. Okay. Again, market push downside. We can see here bottom of the structure. This is our previous low is here, right? This is a previous low and previous swing high. Market, what happened? Take a pullback and push downside. But in this case, market not close below it. Just sweep the liquidity and market went up and close over it. It means this is a reversal. And in this case, we can see here, this is a bullish candle here. This can be bearish candle. But main thing is here, market just close just above it. Okay, after taking out this low. If price close below it, like this one. Okay, so if price close below it, so this is a not sweep here. Okay, this is a continuation trend, because of the trend can be pushed downside like this one. So simply you have to wait for it to taken out the inducement, to taken out the liquidity sweep. Then you can plan for the buy or sell after broken the recent higher low. Okay, like this one, high is a broken and candle close below it, taken out the inducement and candle close over it. In a bullish market, in a bearish market, candle close below it. In a bullish market, close over it. So this is a way to identification of the inducement in a continuation and liquidity sweep for the reversal. Simply you can say in a continuation pattern we use inducement, while market looking for the reversal, then we use liquidity sweep. I will show you on chart, then you can understand more better. In this chart, we can see here clearly that market momentum is a bullish. Simply what we are looking here, it means market momentum is bullish, market taken out the inducement. So how it work here? Look at this one. If market momentum is a bullish and taken out the previous low, that's called inducement, market went up. We can confirm that market taken out the inducement. It means one market taken out the inducement and one market close above it. So this one is a called properly inducement taken out, and this is a indication for the continuation, right? So same thing happen here. Look at this one. Market momentum was bullish, and if market momentum is a bullish, like this one, single leg, take a pullback, again go higher high, take a small pullback, going higher high, and finally what happened? Market taken out the inducement. So it means when market taken out the inducement, this one is not confirmed yet. Market confirm when price close over it. So when price close over it, it means this is a proper inducement taken out, and we can plan for the continuation to the upside. And same thing happen here in a next structure, like market momentum was bearish, like this one, and sweep and go higher. But look at this one. This is a not major structure. This is a minor structure, because of the previous high and previous low both are protected here. And if anything happened between this one is a called previous, and this one is a called internal structure, you can say. Look at this one. What happened here? Market going higher high, and if anything happened between this one, so this one is a called liquidity sweep here and go higher. So we can expect that we are looking for some continuation to the higher. Okay, so we can see clearly that market not broke this high is here. So it means if anything happen here. Okay, so if market previous low is a sweep here, and after sweep the previous low, market must be close of it. So we can confirm this one is our liquidity sweep here. Okay, so this one is a liquidity sweep is here, and the first diagram was our inducement, and this one, and the second one is our liquidity sweep. In this case, suddenly after taking out the inducement, taking out the liquidity, we are planning for the buy and sell. Let me show you a few more examples. These are few more examples about the liquidity sweep here. We can see here clearly bottom of the structure, market momentum was bearish, and this is our last structure here, which was created like this one. market go higher, taken out the previous low, and then market went up and close of it. If price close of it means the structure is a change here, bearish to bullish here, and now we can expect that market looking for some continuation go higher. Same thing happen here. Look at this one. Market sweep the previous structure here, and when market sweep the previous structure, this was previous swing high and previous swing low, and after that what happened here? Market close below it. When market close below it, we can expect that market looking for some continuation in a downside, mean the reversal in a downside. And again, what happened after broke this one, create small pullback, push downside, but in the same time, market again sweep the previous structure here. But you need to understand here, this one is a sweep here and then market went up. But technically, this one is a not sweep here. Why? Because this one is a not a valid pullback. We can see here clearly this previous candle high and low both are protected here. That's why this one is a not clear here, and this one is happen here. Market take a pullback and then market will go higher. So this can be in a different time frame, but at this time frame there is no sweep here, right? Market went up, taken out this inducement here, and this is an inducement because market is a continuation, because market following like this structure here and going higher high, taking upside, taking out this inducement, then we can plan for the buy. Same thing happening here. Look at this one. This is a first pullback here and go higher and push downside. If you are thinking this one, so this one is also not a valid pullback because of the previous candle high and low both are protected here. If anything happen between this one, so this one is a called internal structure, right? That's why I'm saying part 1, part 2 is important for you to identification of the valid pullback. And right now, what structure is saying here? We can see clearly this is our pullback like this one, another push downside, and this is the internal structure right here. Again pushing downside. It means this one is a liquidity sweep here. So if this one is a sweep, then market must be close of it. Then we can expect that market looking for some reversal to the upside, right? Let me show you a few more example in a bullish direction to bearish direction. In this case, we can see here market momentum is a bullish, and after that what happened here? This point market sweep the previous high. So if this one is a sweep, that means we are looking for the reversal. But how we can looking for the reversal? We need to wait for it to break the recent low, which one is here, and candle close below it. We can see how many times market trying to push downside, but not able to close below it. If not able to close below it, that means we need to wait for it to confirmation before the buy and sell. If market not close below it, then we need to wait for candle closing in upside and downside. Maybe market not close below it because market is a bullish and market can be closed in a next attempt is here. But in this situation, market also failed to close above it. Okay, market just reached the previous high. And finally, what happened here? Market closed below it. Okay, why am I taking this one? Because of this one is our structure like this one. Okay, that's why I'm mentioning this one. So if market closed below it, it means we can confirm that market looking for the downside. That's why what happened, market push downside and market keeps a momentum in a downside. So this is a reversal. You can say liquidity sweep here. In a first one, market not gives any opportunity. Market sweep the both side of the liquidity in a upper side and downside. Both side taken out the liquidity, but market not give a confirmation. And finally, at this point, what happened here? Market give opportunity to the for the sell setup right here. Taken out the liquidity, push downside, candle close below it, and we can expect that market looking for the continuation in a downside. And same thing happened here. After that, what happened here? This is our previous swing low, confirm here, right? And this is our pullback. First pullback is here. This is our pullback like this one, and market went down. So if anything happened between this one, this was a called internal structure right here. So in this case, we can see here clearly market push downside, and after that what happened here? This is our internal structure sweep here, and after internal structure sweep, candle close below it, we can expect a market momentum to the downside. Same thing happening here, right? And this one is a one more example in a bearish direction. We can see clearly that market direction is a bearish. Simply what we are looking here? Simply we are looking here that market momentum is a bullish and turn into bearish. This one is a sweep here. We don't need to take any action. Again, market close below it. So if market close below it, we need to wait for it to take out the inducement, then we can confirm our next structure here. So what happened here generally? We can see this one is a sweep here. Candle close below it. We can expect that market looking for the continuation. Market push downside, and after sub momentum market go high, taken out the inducement, again close below it, we can plan for the sell. So if anything happen between this one, this is a called internal structure, right? No. Because of this one, look at this one. How structure change here? This is a bearish, take a pullback, push downside, sweep this one, close of it, and now turn into bullish structure. This is a major structure happening here, right? And finally, market close over it, taking out the inducement in a first attempt, market not taking out the inducement and failed to create low. That means momentum has been again changed, bullish to bearish. So what are you looking here? Suddenly we are looking for the sell after taking out the inducement and push downside. So this move happened here or directly in a bullish market, in a bearish market, everywhere. Simply you need to understand few things is here. If market momentum is a bullish and taken out the first pullback, that's called inducement, like this one. First pullback is taken out, that's called inducement. This can be closing and sweep, both are valid here. And again, what happened here? In a first attempt, if market not able to push higher, like this one, and not able to push higher and push downside, that means momentum has been changed, bullish to bearish. And now you need to wait for it to take out the inducement before push downside. That's it. Because of this one is a inducement and inducement. But this inducement only confirm after break the previous high and candle close of it. But in this case, market not close of it. That's why this one is a fail. Market momentum is a change and market create one more low is here. So we can confirm this is our next inducement here and we can plan for the sell in a downside. That's it. So in this chapter, I hope you learn that how inducement is a work and how liquidity sweep is a work. I will show you exactly how you can take entry in a next upcoming chapter. And if you not understand anything, simply you can watch this chapter multiple times. I'm very sure this chapter will help you a lot to identification of the inducement and liquidity sweep. So thank you so much. In this video, enough for the day and I will see you in the next chapter. Happy trading.